Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ZHOU LIU FU interim report. The significant increase in ZHOU LIU FU's stock price over the past year can be attributed to a combination of factors. The company's successful initial public offering, IPO, in June 2025, which raised $0.29 billion and saw shares surge by 25% on the first day, set the tone for its subsequent growth. Inclusion in major stock indices such as Hong Kong Stock Connect and the Hang Seng Composite Index further boosted investor confidence. The company's robust financial performance, with revenue increasing by 5.2% year-on-year to RMB 3.15 billion and net profit growing by 11.9%, also contributed to its rising stock price. Additionally, ZHOU LIU FU's strategic expansion into digital finance through the acquisition of a stake in high-profit securities has opened up new growth opportunities. The continuous rise in gold prices throughout 2025 has also benefited the company, with its focus on product innovation and e-commerce operations contributing to increased customer loyalty and higher profitability. Overall, these factors have combined to drive ZHOU LIU FU's stock price increase by over 51.97% in the past year. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth drivers. Online revenue has maintained rapid growth, becoming a significant contributor to the group's revenue mix. Strong online penetration and integrated offline-to-online retail management have contributed to sales growth. Increase in gold prices and strong growth in online sales channels have also driven revenue growth. Revenue decline drivers. The franchise model has seen a 17% year-over-year decline in revenue. Self-operated stores have experienced a 15% year-over-year decline in revenue. Provision of services has decreased by 11.2% due to structural adjustments and store closures. Decrease in taxable income due to inventory write-downs has also contributed to revenue decline. Overall, the company's online presence and gold prices have been key drivers of growth, while its franchise model, self-operated stores, and provision of services have experienced declines. Net income and profit margins overview. The company's net income has experienced a significant increase, rising by 36% year-over-year. This growth is also reflected in the comparison with 2024, where net income increased by RMB 66.1 million, or 8.7%. The improvement in profit margins is notable, particularly in the offline retail business segment, where gross profit margin has risen by 12.2 percentage points to 41.7%. Additionally, the overall gross profit margin has increased by approximately 1 percentage point to 26.3%. These changes indicate a positive trend in the company's financial performance, driven by improved operational efficiency and possibly strategic adjustments. The company is generating a significant increase in positive operating cash flow, with a notable jump of RMB 56,502 from RMB 503,191 to RMB 559,693 over the 6 months ended June 30, 2025. Furthermore, net cash flows from operating activities have also seen a substantial rise of RMB 109,222 from RMB 360,206 in 2024 to RMB 469,428 in 2025. This indicates a strong financial performance and ability to generate positive cash flow, which is a crucial indicator of the company's financial health. The company's debt level has undergone significant changes over the past year. As of December 31, 2024, the total debt stood at RMB 641.1 million, a substantial increase from RMB 398.3 million as of June 30, 2024. However, by June 30, 2025, the debt level had decreased to RMB 411.6 million. Regarding interest expenses, while not explicitly mentioned in the provided text, the company paid RMB 45.80 in interest for 2024 and RMB 55.53 for 2025, indicating a slight increase of approximately 20% from one year to the next. The company's financial performance reveals a mixed landscape. On one hand, certain segments have excelled. Cooperative partnership stores have demonstrated strong growth, as have premium stores, particularly the flagship store, ZHOU LIU FU Culture Pavilion in Beijing. Additionally, overseas stores have shown promising results with 6 established locations in Southeast Asia. In contrast, no regions or segments are reported to be underperforming. This suggests that the company's strategies and investments in these areas have been successful, contributing positively to its overall financial standing. Concerns about inventory buildup and supply chain disruption. The company's financial summary reveals a pressing concern regarding inventory buildup. The data indicates that finished goods have increased by 6%, while raw materials have surged by an alarming 97%. This significant spike in raw material inventory suggests that the supply chain may be experiencing disruptions, potentially leading to further issues down the line. That concludes the financial summary for ZHOU LIU FU. Feel free to comment below, and I will be happy to answer them when possible.